Welcome to another episode of SuTube. You guys, I'm not gonna lie, Bitcoin is in rough shape if you ask me, and unfortunately a lot of moon boys are being blindsided by this move, but for those of you who have been following me, none of this should have come as too much of a surprise to you, as I've been talking about this potential scenario since early June. I posted this video. This was a live stream I did with the MDX Algo community on June 13th, and I basically noticed that, hey, we broke structure here and we pulled back and we were getting resistance at the 786-886 fib pocket. And I got very bearish around this area right here. And honestly, at first, I kind of mentioned this theory as a bit of a joke because some of us in the group were talking about some potential bearish setups on the 1 hour, the 4 hour, and stuff like that. Then I was like, hey guys, hate to be the bearer of bad news, but check this out. And I brought up this weekly chart, and I know it feels unrealistic because the weekly takes so long to play out, and that's what really gets a lot of people, right? Because it's hard. In crypto, people are very impatient, and people love FOMOing into positions and trying to play breakouts. Unfortunately, on a weekly time frame, you can get faked out for several weeks. And this is a perfect example. Even in that video, you can go back and watch it. I can't remember if it was that one or the one after or what, but basically I was predicting that, I think that we're going to go and we have very bearish structure because of this exact RSI divergence. I was extremely bearish with this structure break here. This RSI divergence, it's something that I've back tested on several different time frames, the 4 hour and the daily and the weekly. And honestly, when I back tested it, because when I first started trading several years ago, it's always a good idea to back test some patterns that catch your eye and kind of know what your probabilities are when taking those positions. So you're not just guessing on a gut feeling, right? Knowing that, you can ignore the news and ignore fundamentals and just trade the charts because you have an understanding that, well, who knows what the chart was doing or what the fundamentals were doing last time the chart looked like this. So I just basically went back and back tested several years of 4 hour and daily charts on the weekly. There's not a ton of examples, but basically back testing this exact pattern of getting a structure break followed by kind of a double toppy area, whether it's in the top fib levels, the Stuber fibs, or double top, whatever you want to call it. But this very specific divergence from extremely overextended conditions down to irregular territory. It's been a very strong signal in the past, and I was basically saying that, hey, at this point, I really think we're going to break the lows, set another lower low, but after we sweep these lows, understand it's possible we get another reaction rally. And I actually called this out on my Twitter ahead of time too. I said, this is kind of what I'm looking for. This is how it actually played out. Just looking for that 786 fib level with this RSI divergence. And again, just going back to how this looked, absolutely nailed that. But again, even though I called that and I traded that, I was still bearish. Just that I'm a trader and I don't care which way the market goes. I'll trade it either way depending on what the chart looks like. And I made it very clear that although I was still bearish, I was willing to take this bullish setup. And I was also very clear that my target was 68 to 70,000 because that was basically my new Stuber fib pocket. There's two different ways I can draw this out. Actually, before I go into that, I just want to show here that, so first of all, here's my fib pocket, right? Pulled from our all-time highs here a few months back, I think when was that? March. Pulled from there down to where we've currently bottomed on this little run to the downside. And on top of that, so we're trading into resistance on a horizontal level. We also have this diagonal resistance, getting our third touch point here. And that RSI divergence is extending even further. And again, pulling back, getting that retest slightly lower again on the RSI. So basically what I'm looking at here is after we get this bearish structure break here, we pull back up towards that same level. And as we pull up towards this level, notice that that our RSI is basically coming at the same level with a lot less strength. It's the relative strength index. So it's not so much that I'm considering this overbought, but I am considering that we came up to the same obviously very significant resistance, right? I mean, that's where our all-time high rally got stopped. There's obviously a very strong level of resistance there. Now we're going to attack it here with significantly less strength. and people were getting very bullish at that point. People love getting bullish at resistance, just like they love getting bearish at support. And down here was a perfect example. I mean, I laid out that I thought we were going to get some sort of a recovery there. But a lot of people, something I like to keep my eye on is the retail long short ratio. And something that I noticed was as we were trading down here, all of a sudden the market was getting short heavy. So retail traders are starting to FOMO into the short way too late. That's very normal. So then we get that bounce. Everybody starts getting extremely bullish. I mean, this was right before the Trump speech at the Bitcoin conference when we got topped out here. It was that day. So basically, I was already ready for this level several weeks in advance. I had no idea about any speeches or anything like that. Just looking at the charts, I said that if we sweep this low here, I thought there was a good chance we pull back to that Stuber fib pocket, and that's exactly what we ended up doing. So nothing crazy there, just charts doing chart things. And now there's actually two different ways I can draw this fib level. One is just, again, this full range from our current all-time highs down to where our current local bottom is. There is another way I can draw this because we have this lower low here. So I could technically draw this. This would be our lower high here and the same bottom here, and same thing though, right? Yes, we still traded right into that fib pocket. So nothing crazy happened there either, right? Just like back here, we got that structure break. We came right into that fib box, perfectly filled it, and then rejected. Lower low, come right back to that fib pocket, fill it perfectly, getting rejected. Again, just people getting bullish right at resistance. That's very normal. The scary thing about this chart is this RSI divergence. So this is why I was getting quite bearish about the charts, is because I often treat this as a bit of a reversal pattern. And the last several times this has happened on the weekly chart, let's just look back. Last market cycle, we had it play out twice actually. It did call the bear market. We got this little structure break, lost these candle bodies here as support, and we got that RSI divergence, and we nuked 77%. Even a few months before that, we got the same thing, lost some candle body support, got that RSI divergence, and boom, nuked 50%. Back here, same thing. Yes, maybe COVID had something to do with this. Either way, we had very bearish structure forming after we had the same thing, losing our candle bodies, getting that RSI divergence, boom, 68% nuke. Last market cycle, losing our candle body support, getting that RSI divergence, boom, bear market on. So as you can tell, this is a very serious signal. So whether or not it plays out the exact same as those ones, who knows, right? Maybe this is all the move had, because yes, we did dump about 25% from that signal. That on its own is a very big move. I would call that signal a great success at this point, but honestly, I just don't know if it's done. The RSI has so much potential room to the downside. Yes, it could bounce around and take some time to play out. That's totally normal, but people have a hard time waiting for the weekly to do its thing, because like I said, yes, even though I was expecting a bounce here, I was expecting it to be short-lived, basically. A few weeks, hit that resistance, and time to start looking at resistance plays once again. The 4 hour, no differently, obviously lower low, that would be our lower high here. Yeah, right as we were trading into the Trump speech, basically, trading right into that fib pocket, boom, just get nuked from there. So not all too crazy to see us. And guys, I treat every chart time frame the same. Obviously the weekly, I've showed you a few examples here. The 4 hour, here's a perfect example here. The 1 minute chart, perfect example here. I was showing this strategy on actually here. I can eyeball two setups right now from this. Is that basically this is a strategy I've been showing in my last few live streams with the auto charting tools with the MDX algo indicators. Basically pulling a fib from our lower high signal down to our lower low signal, and notice where we end up getting rejected here right in that fib box. So same thing on the 1 minute, right? Yes, it happens a lot quicker, but it's the exact same structure. And we get down to my range target, right? That's why I have this other fib here. Now, you know what? After setting another lower high, let's just see what happens here. Lower high down to where we bottomed out at that time. Where do we end up getting rejected? Right in that 786, 886 fib pocket. So just to kind of show you how strong those fib levels are and how normal it is to see those structure breaks and then getting those pullbacks, right? Here's a perfect example. We start losing some of these support levels. We get that lower high signal, but yeah, we break that structure and we do get a pullback to those fibs. So again, just breakout trading is one thing, but generally speaking, when you sweep structure, you break a lower low or you break a higher high, for example, so often, more often than not, you get some sort of a retrace, and those fib levels just happen to work out very well, and I use them on every time frame, right? Seeing them on the weekly, the 4 hour, the 1 minute, the 5 minute, I see them everywhere. So there's no reason for me to not take the weekly chart serious, because if anything, longer time frames, it takes significantly more money to change the momentum of a longer time frame. It's actually quite easy to change the momentum of the 1 minute, and you still see it getting respected so well. So I mean, on the weekly, yeah, I just cannot be a moon boy at this time. I know there's a lot of influencers and stuff like that that have been saying unfollow bearish people. I mean, to me, that just kind of reminds me of, during the pandemic, for example, it was, even though some doctors had very reasonable approaches towards, concerns and stuff like that, they were silenced very quickly, right? And that's kind of what a lot of these influencers, it seems like they're doing, right? They don't want you to be bearish. They want you to pump their bags, because again, especially with meme coins and stuff, there's a lot lower market cap. It takes less money. So yeah, when average people like us hold onto the bags, yeah, sorry, they can dump on you. You can be their exit liquidity, and that sort of thing. So they don't necessarily want you to see that. And that's not going for everybody. But really, when you see bearish price action happening, you can really tell who's a trader and who's an influencer. If people are just saying we're bullish for the sake of being bullish, just no other reason, no chart explaining it, nothing, that's a bit of a red flag to me. And honestly, those people, if you've seen any of these people who are saying that, unfollow bearish people, they're wrong, blah blah blah, to say to unfollow them and pretend there was zero red flags here, even though this is day one trading stuff, you guys. A basic structure break, a low, a lower low. If this was any other time frame and this was day one of me explaining to you how charting works, you would understand that that's a bearish signal. So for these people with hundreds of thousands of followers to completely ignore that and say there's zero red flags in the chart, that's just a little bit alarming. And honestly, consider taking a step back and maybe unfollow the people who are getting you wrecked. I have lost dozens of followers on Twitter, honestly. And I believe that it's because I've been so accurate, but saying what people don't want to hear. A lot of people do not want to even accept bearish price action. Markets go both directions, you guys. I want to be very clear. I'm extremely bullish on crypto as a whole. It's just that, fundamentals are always getting better, and it always feels like, oh, there's not going to be a bear market. There's not going to be a bearish trend because, whatever reason in the fundamentals. Fundamentals for crypto are getting better every single day. We still have bear markets. We still have retraces. We still have bearish trends, all that sort of thing. So just to pretend that sort of thing doesn't happen is very irresponsible in my opinion. So, yeah. I don't think there's anything wrong with being bullish, and I know there's people who can scalp longs in these conditions. There's people who are trading meme coins and doing well on them. There's people who are just able to trade the long side better than the bear side. That's totally fine, you guys. I'm not trying to shit on anybody who's bullish, but again, just to pretend that there's zero red flags in this chart and being on a weekly time frame, there's some big concerns with this chart. And my big concern is just that, again, the June 13th, when I made this video, it was kind of a joke at first, but everything's been playing out so accurately, including this push, this sweep past the lows and retesting that fib box. It played out so perfectly that now I'm a little bit concerned, because this is just my range target, right? If this is a full-on swing reversal, I hate to be, and this is a trigger warning right now, you guys, a full swing reversal, there's some targets that nobody really wants to even accept as a possibility. And I want to be This is another thing. I gotta be very clear on this. I am not saying that we're going down to $28,000 or $22,000, but the possibility is there. And if this was not a weekly chart, if this was a 5 minute or a 1 minute, I would be targeting these levels down here. Yes, I would be starting to take profits within the range, because play the range until it breaks. But if it is going to play out as a full reversal, yeah, there's some levels there that a lot of people cannot stomach and don't even want to pretend is a possibility. And I hate to say it, but it is a possibility. Just like back here, I was in the market for this. Maybe not everybody was. I was in the market for this. And yes, COVID was a thing, but you know what? At the end of the day, we pulled back to that 786, 886 fib pocket. And then that's where we were able to take off with momentum, right? And go absolutely parabolic. I'm not saying this has to be the end of the market cycle, but I think to pretend that there's no chance of a bigger pullback is just dangerous. A lot of people saying that, this was maximum pain. That this little sell-off here, that's the capitulation, that's maximum pain. If anybody thinks that, this 25% correction is max pain, you're just admitting this is your first market cycle, and that's totally fine. Just understand that for those of us who have been here for 1, 2, or 3 market cycles, we understand that 25% is not a lot. It feels like a lot at the time, but in crypto, we can go a lot deeper than that. So just something to be aware of, that no matter how we feel, always be ready for being wrong. What's your plan B? If you're saying that this is the bottom, that's it. It's bull market on. We're going parabolic no matter what. Do you have a backup plan? Do you have an exit strategy? Do you have any sort of taking profit, any sort of profit taking on your radar at all? Like, what is the game plan? Because anytime I enter any trade, my main thing is always just making sure I know what worst case scenario is. What happens if this trade goes against me? Because every trader, no matter how good they are, every trader takes losses. Every trader has theories that are invalidated. And as long as you're ready for whatever to happen, then it's not such a big deal, right? Like if we blast off through all-time highs, I'll be happy. I'll be a moon boy just like everyone else. I'm not getting wrecked just because I'm bearish right now. I have invalidation levels on all my trade setups. I'm using stop losses. I'm using proper risk management and position sizing and that sort of thing. So I don't care which way this market goes. I'm just taking a very level-headed approach, because this market has, honestly, when you've been in the crypto market for several years, it takes the emotions right out of you. You eventually just, all these numbers on the side, yeah, they're big numbers, and it feels like we can't see some of those levels ever again. But understand that the market maker and the market itself does not give a shit about our emotions. It will do whatever it does. And until market structure changes, I'm just going to hold on to my bearish bias. So unfortunately, I wish I had better news, but that's just my honest approach to this market right now. We start taking out lower highs and stuff like that, then absolutely it's possible we start, if we break out and we actually break above this lower high over here, let's just say we do something like this, then yeah, you know what, absolutely it's possible we start staircasing higher. But that structure hasn't changed yet, and as a responsible trader, I more so like to trade the charts that are already there rather than pretending that the charts are going to do something when I don't know for sure, just because something that I feel in my gut, right? So that's kind of my approach. Yeah, I guess retail longs are starting to build as well. This is what happened in the last nuke as well, is that retail started desperately trying to long the dip because everybody thinks all-time highs are right around the corner, even though structure is very bearish on anything from a 4-hour chart and up. Yeah, the longs are building. Retail is desperate to catch that long at the bottom, but yeah, that's just adding fuel for the market maker. That's adding liquidity that we can just push further to the downside. So as far as my bearish approach to this market goes, I hope that we see retail keep building. It was at 50% a couple days ago, and it's up to almost 65%. There's a lot of people trying to long this dip here, and I'm just not sure how it's going to work out for them. If we start breaking structure, let's just say, hey, you know what, at this point, we have a low and we've taken out this lower low, so lower high. If we end up getting above this level, then I think it's possible we get some sort of a retest to a Stuber fib, something like that. Let's just see how close my eyeball is there. Yeah, pretty bang on. We get something like that. I'll be bullish again short term. But something to consider is it will be short term again because we do have this bearish structure break. I would be looking for resistance in my opposite Stuber fib pull, right? If we end up starting to break structure to the upside, understand that there is still resistance. Just because we're going towards that 70K again does not mean that we're necessarily going to break it. We might, but understand that we're going to be approaching it again after breaking structure bearishly, right? We lost those lows here as we got this. We had this high, higher low. We broke below that. So with that structure break, I, looking for a basic short setup, I would be looking for, a bounce towards that level and then looking for the trend to continue basically. Again, doesn't have to happen, and it totally depends what happens with structure along the way. I trade shorter time frames anyways, but just a few things to be a little bit cautious of, right? Because I know people love to get bullish at resistance, and I know that, if we start as we go down here, retails are building longs. In my opinion, if we get back up to these resistance levels again, we are going to see that retail long number shoot through the roof. People are going to be extremely bullish at the wrong time once again and going to get shit on, unfortunately. From the opposite side, not all doom and gloom. I do want to say I can tell from an eyeball right now, we are trading from, if I use this as a pivotal point here, we are trading very near a Stuber fib right now on the opposite end. Yeah, see, we basically filled it here. So it is time to be careful on both sides, right? Just because I'm bearish doesn't mean I'm just randomly FOMO shorting into something unless I see something on the shorter time frames, which I was already showing some setups and stuff. But yeah, just kind of an area to be cautious at. Just like on the weekly, when I was saying just the other day, that, anything can happen at these resistance levels. I can be invalidated any day, but understand this is the time to be cautious, because to just straight up FOMO long, getting your FOMO longs in at resistance, that's not really safe trading practice, right? Just always be cautious at resistance, just like on the other side, be cautious at support. Support is support until it's broken, just like resistance is resistance until it's broken. It doesn't matter what it looks like going into that level. More so, just understanding that that level is what it is until it's broken, right? Let's just take a look at some shorter time frames here again. Yeah, just notice I'm just not seeing a ton of strength here. Yes, it's possible we get some sort of a relief rally soon, but just look at that carnage we saw on the way down today. Just absolutely nuked. And people are telling you that we're up only, that we're bullish, that to unfollow bearish people and stuff like that. That's just nonsense, you guys. Understand that the market does not care what we think, and it can do anything. And having a basic understanding, a very basic understanding of chart structure will go a long ways in this market, as opposed to gut feelings and trying to follow news and being late to the news and trying to trade it and stuff like that. It's just, I don't know. I've been down that road. My first market cycle, trying to trade altcoins based on news in a bear market. Yeah, fundamentals always seemed like they were getting better and better, and I was just getting more and more wrecked. So, from personal experience, I can say that I trust chart structure way more than fundamentals or news. And that's why I never even those important news meetings, FOMC meetings, all that sort of stuff, unemployment numbers, all of that. I understand that there's a possibility I misunderstand how it's going to affect the market when those things come into play. So the chart structure will show it. If something bearish happens in the fundamentals and it's actually going to affect the price, you'll see a bearish structure break in the charts. If it's going to act bullishly, you'll see that bullish structure break in the charts. So just understand that, yes, I understand trying to use your news to your advantage, but it's just not realistic in my opinion. And just understand that, maybe if you're misunderstanding charts and you're not reading charts properly, so you're looking to the news to explain things, that's more of a coping mechanism than anything. And just understand that it's another place where you can make mistakes. And that's why I like to keep my charting very simple. I just follow basic structure and Fibonacci's, and then some of my indicators as confluence here. But yeah, it's basically Yeah, for me, it's all chart structure, because at the end of the day, if the news matters, the chart structure will show that. That being said, my friends, I think that's about all I wanted to go over today. So hopefully you found this video useful. For those of you interested in some of my favorite indicators here, plus access to the VIP Discord, there's an additional 10% discount on checkout using, and that's on top of current promotions, using my link down below. I'm personally doing most of my trading on Blofin, a no KYC exchange. For those interested, I have maxed out the cashback on my affiliate links, so you actually get 20% back of your trading fees, as well as just some deposit bonuses and that sort of thing. So if that's something that interests you, if you need a new non-KYC exchange or just want a backup account in general, check out my link down below for that as well. And with that, I'm out. Stay safe, my friends. Peace.